I will delete this file in 20 minutes, not because it's classified, but because after this, you will no longer be able to say, it's just a metal. At 4 in the morning, the lights are off in the Pentagon, but underground, in server rooms and sealed offices. Everything is running at full load. I saw the entry added to the materials classification system. Not a press release, not a market statement. A dry line inserted without noise. Silver. Strategic conflict material. And in that moment, everything fell into place. The trading floor is usually loud even before the open. That morning, it was quiet. Not holiday quiet, but the kind of silence that comes before an uncomfortable calculation. Traders' hands were damp, not from coffee. Cursors jittered as if terminals were arguing with themselves. A few screens froze for fractions of a second. That's enough to know the chain is already taut. When the military places a metal into a conflict category, markets don't learn it from the news. They learn it from latency. I held an internal memo marked with a classification civilians never see. It didn't say Tomahawk. It listed system indices, component trees, node codes, guidance electronics, high temperature contacts, EMI shielding. Everywhere, silver, not a substitute, not we can try. A non-optimizable component. Then the numbers, deliveries, warehouse balances, contracts, timelines. Red rows where forecasts drop below the minimum acceptable for military planning. At that point, the silver market stops being a market. It becomes a rear area, and rear areas don't obey free pricing logic. They obey priority. Who gets first? Who waits? Who doesn't get any? This isn't a shortage at a display case, it's a shortage on a production line. When the line stops, no rhetoric starts it again. I remembered a meeting on the 42nd floor at 6:15 a.m., windowless room. Heavy air. Report 404B lay on the table, updated overnight. No panic, just assumptions that no longer work. Rapid supplier substitution possible. Consumption optimization likely. Inventories offset disruption. Next to them, engineer's notes. No. 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 Silver doesn't scale the way economists want it to. You can't print it. You can't rush it. You can't replace it without losing function. Why now? Because modern war isn't steel tonnage, it's precision, resistance to interference, microseconds and microwatts. Silver is the ideal conductor where an error equals a miss. When a guidance system drops contact for a fraction of a second, a missile isn't slightly worse. It's useless. Analysts don't know this. Designers do. The cynical math is simple and ruthless. Military demand is inelastic. It doesn't walk away when prices rise. It crowds out civilian demand when material is scarce. And when a state officially classifies a metal as conflict critical, it means one thing. Priority is locked in. Paper contracts become secondary. Exports become permissions. Permissions become politics. Politics becomes timing. I've seen how it looks in logistics. First, a temporary review. Then, additional coordination. Then, revised terms. Nothing illegal, just friction. And friction in supply chains is a hidden stopcock. Defense gets a green corridor. Everyone else waits. Waiting turns into shortage. Shortage turns into premiums. Premiums turn into disappearance from the open market. Someone swore quietly. Not from emotion, but from realizing the usual models don't include the military factor. They count investment demand, industrial demand, jewelry. They don't count orders. Orders aren't traded, they're executed, and when an order concerns a material, the market learns last. Stocks look sufficient until you calculate rates. Not how much exists, but how much is needed at current tempo. Tomahawks aren't museum pieces. They're consumables. Each system drags a chain behind it, training, maintenance, replacements. Every replacement uses silver, a little, constantly. When constancy meets a limited flow, the result is predictable. I saw a chart they don't publish. Not price, flow, in and out. The line flattened where it should have risen. Next to it, a note, supply rigidity. A polite term for a simple truth. You can't ramp mining on command. Ore bodies don't listen to press conferences. Refining doesn't speed up for slogans. Silver is geology and time. And this is where the loop begins. Classification raises priority. Priority compresses access. Compression lifts price. Price invites speculation. Speculation drains the remainder. Remainders move into closed circuits. Closed circuits don't return metal to the market. The loop closes. Each step amplifies the last. The self-deception is thinking, the military will take a little. They never take a little. They take assuredly. They take ahead of need. They take with buffers for uncertainty, because uncertainty is the enemy of planning. If you see the classification, uncertainty has already been judged high. I watched risk managers change their language. They stopped saying price. They said availability. Stopped saying market. They said allocation. Different worlds, in one you buy. In the other, you're assigned. The transition between them is always quiet. When the Pentagon labels a material conflict critical, it isn't about secrecy, it's about controlling flow. Who can access the metal and when? And if you think this doesn't touch civilians, remember how many civilian technologies sit behind military priority. Electronics, energy, communications. They all stand in the same line once a line appears. I saw strange caveats appear in models. Subject to continued access. Absent restrictions. These phrases betray reality. They mean restriction is already being treated as baseline, just not named yet. The most dangerous part is perception lag. Publicly, everything looks normal. Silver exists, prices fluctuate. Commentary is calm. Internally, the mode has changed. A mode where metal is a war resource. War resources aren't debated on talk shows. When I left this system, they told me, "You're seeing a threat where there isn't one." Threats are irrelevant here. There's a function. When the function changes, consequences follow. Classification is a functional change. If you want to know what comes next, don't watch quotes. Watch permits, licenses, delivery lead times. Phrases like temporarily unavailable, rising premiums for physical, the silence of people who used to talk. That's the language of shortage. Silver won't vanish. It will move to where priority is higher and return only when tension falls. The question isn't whether the price rises. The question is whether the material is available when you need it. The Tomahawk deficit isn't about missiles. It's about how quickly the world shifts from markets to allocation. And that shift always begins with a single word inside a closed system. Today, that word is conflict material. And here the road splits into 3 paths, and all of them lead into the same narrowing channel. Not because outcomes differ, but because timing does. Once silver is reclassified inside the system as a strategic conflict material, the market stops being the primary allocator. Priority does, and priority has its own logic, one that ignores price signals when pressure rises. In the first version of what follows, the one that allows everyone to keep their composure a little longer, nothing appears to break. Official statements are calm. Defense procurement insists that classification is procedural, not restrictive. Civilian supply continues, albeit with longer lead times. Prices drift higher, but not explosively. Analysts argue that substitution and recycling will fill gaps. The market absorbs the story because the shelves aren't empty yet and contracts are still being honored. This is the phase where complacency feeds on continuity. The pipes still carry flow, so no one asks who controls the valves. But beneath that surface, the plumbing changes. Allocation quietly replaces availability. Suppliers begin asking different questions. Not, how much do you want? But, who are you shipping to? Export licenses take longer. Insurance clauses grow thicker. Delivery schedules stretch from weeks to quarters. None of this triggers panic because it's framed as diligence. Meanwhile, defense orders stop competing on price altogether. They preempt, they reserve, they warehouse. The metal moves, but it moves inward, away from the open market, into closed loops where visibility ends. Then the second path becomes unmistakable. Tension persists, and persistence is what turns procedure into policy. The classification starts to bite, not through bans, but through sequencing. Defense gets first call, then infrastructure, then critical industries. Everyone else waits. Waiting creates gaps, and gaps create premiums. Those premiums don't show up evenly, they cluster in physical delivery. Paper markets still trade, futures still clear. But the spread between paper and physical widens in ways that no model explains cleanly. The explanation is simple. Claims are plentiful, metal is not. This is where the industrial ecosystem feels it. Electronics manufacturers quietly revise bills of materials. Energy projects reschedule. Communications hardware slips. None of these failures make headlines because they look like ordinary delays. But delays stack. Projects miss windows. Budgets swell. Substitution attempts degrade performance. The word optimization starts appearing in memos where replacement once did. Optimization is the language you use when replacement isn't possible. And then there is the third path, the one markets hate because it doesn't negotiate. A shock intersects with scarcity. It could be a surge in conflict intensity, a supply disruption at a major mine, or a logistics failure that turns delay into stoppage. In that moment, the distinction between civilian and military demand collapses. Priority hardens. Exports are paused pending review. Reviews extend. The open market thins abruptly. Prices gap not because of speculation, but because offers vanish. The price you see is theoretical. The metal you need is not for sale. This is when the reclassification shows its teeth. The state does not need to announce controls. The controls are implied by access. Contracts with force majeure clauses get invoked. Insurance underwriters tighten terms overnight. Clearinghouses demand more collateral for metal-linked exposures. What looked like a commodity becomes a bottleneck. Bottlenecks don't clear with optimism. If you want to know which path you're on before it's obvious, don't watch headlines. Headlines follow. Don't argue about valuation. Valuation assumes choice. Watch behavior. Watch delivery lead times from refiners and mints. When they extend simultaneously across regions, it's not demand, it's prioritization. Watch export licensing queues and how often routine becomes pending. Watch defense procurement schedules and how far forward they book. Watch the divergence between futures volume and physical turnover. When volume rises, but metal doesn't move, claims are chasing a fixed object. Don't watch the news, watch the flow. Watch warehouse reports for changes in categories, not totals. When eligible becomes registered without a price incentive, metal is being pulled for reasons unrelated to yield. Watch premiums on small bars and coins relative to wholesale. Retail stress shows up there first. Watch substitution chatter from engineers rather than traders. When engineers start saying non-ideal but acceptable, the system is rationing performance. And while you're watching, understand the rule that governs conflict allocation. Elasticity disappears. Military demand does not price itself out. It crowds out. The crowding is quiet at first because it's contractual and scheduled. Then it's abrupt because it's strategic. The market is allowed to function until it interferes with readiness. After that, it adjusts. So what do you do when a metal crosses from market, good to conflict resource? You stop assuming continuity. You stop assuming that because something traded freely yesterday, it will do so tomorrow. You separate exposure to claims from access to material. Claims can be liquid while access is not. You shorten supply chains and favor immediacy over yield. You value possession over promise, not as a bet on price, but as a hedge against allocation. Practically, that means paying attention to form. Form matters when access tightens. It means recognizing that long-dated delivery is a risk when priorities can jump the queue. It means keeping optionality in procurement and inventory rather than optimizing it away. Optimization is fragile when priority shifts. Slack is resilient. This isn't about hoarding. Hoarding assumes fear. This is about positioning. Positioning assumes foresight. The goal is not to profit from conflict. It's to avoid being surprised by its mechanics. When allocation replaces price, surprise is expensive. There's a broader implication here that most people miss. When strategic classification spreads from energy to metals to components, the economy quietly militarizes its inputs. Not in rhetoric, but in routing. The same truck that served 3 customers now serves 1. The same mine that supplied 5 sectors now supplies 2. Complexity collapses into hierarchy. Hierarchy is efficient under stress, but it is brittle when stress shifts. At the end of this road, regardless of which path dominates, there is a philosophical line you cannot avoid. The line between markets that discover priorities and systems that impose them. Markets tolerate inefficiency in exchange for flexibility. Systems sacrifice flexibility for assurance. When assurance becomes the objective, flexibility is treated as risk. Saying yes to assurance feels prudent. It promises continuity. It feels adult. Saying no feels naive. It sounds like clinging to a past that no longer exists. But saying no here doesn't mean rejecting reality. It means refusing to confuse liquidity with access and price with availability. It means planning for a world where some inputs are governed by calendars and permissions rather than bids. The right to say no is not a protest, it's a posture. A posture that accepts that when materials become strategic, they follow a different map. That map is drawn by urgency, not equilibrium, by readiness, not returns. You don't need to predict the next escalation to respect the map. You only need to acknowledge that it exists. The Tomahawk deficit is not about missiles. It's about the speed at which the rules of allocation change when conflict enters the ledger. It's about how quickly a commodity becomes infrastructure and infrastructure becomes policy. That transformation doesn't announce itself. It reveals itself through delays, premiums, and silence. Once you see it, the choice is not whether to believe. The choice is whether to adjust before the channel narrows further. Because when priority locks in, the conversation ends. And what you secured before that moment determines whether you navigate the channel or wait at the edge while others pass through.